Hey, welcome to Everyday Economics, a podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our great podcasts at americastalking.com. To support Everyday Economics and podcasts such as this one, please make your tax-deductible charitable contribution to the Franklin News Foundation by clicking the link in the show description. We're recording today's episode on Monday, January 30th. And joining me as always is Dr. Orphe Divounguy, PhD economist, and a guy who gets it right a lot. Hey, so we've been talking about this housing situation with regard to are we in a bubble? Are we not in a bubble? Is it a bubble? And, you and I, we trade, I think on some level, it's become sport that we trade these screaming headlines from YouTube, from YouTubers who are trying to handicap the real estate market. Fact is, sometimes they get it wrong. Sometimes they get it right, but they're always screaming. The headlines, I don't know how they could make the font larger.
Their faces, though, it's always doom and gloom. You turn on YouTube, you search housing market. Everybody's always all about the doom and gloom.
Yeah. Let's let you take a victory lap.
It's not doom and gloom. This time is different. There was an affordability crisis that led potential home buyers pull back somewhat. They pulled back because prices and mortgage rates were too high. What that means is if affordability improves, right? If prices come down, which I believe they will, although they're coming down very slowly, and or mortgage rates continue to fall, which they are falling because the risk of recession has gone up, then buyers would come back to the table. And this is exactly how 2023 started. Affordability improved. Mortgage rates have been falling since September. As soon as mortgage rates started falling, mortgage applications started coming back. 2023, we're starting to surge in mortgage applications. But also pending home sales are coming back up. And the big question, really, the big fear for me is not a mad rush of sellers, distressed sellers, because that's what the YouTubers are claiming, right? The YouTubers are claiming that there's going to be a mad rush of distressed sellers. That's not my fear. My fear is that we still don't have enough inventory.
You have taken this line, I think, from the day that I met you, and that you are a firm believer, you are dug in on the idea that we do not have enough housing in the United States. And you could take that string in a conversation with Orphe Divounguy, and you can run it all the way back through a number of points in society, all the way back to homelessness, which I think is fascinating.
Absolutely. I sit on the board of an organization called Housing Connector, a nonprofit that tries to help those at risk renters find a home and stay in a home. And look, I'm a strong believer that this country needs help. You look at the data in 2019, before the pandemic, there were 7.6 million households that were doubling up, living with in other families' homes, compared to just 3 million units available for sale or for rent in the United States. And remember, a lot of these families also, especially the ones that are low income families, they need affordable housing. This country just doesn't have enough affordable housing. So in response to all the people that say, look, the prices are falling. Look, I want prices to fall a little bit. We need that. We need prices to adjust downward a little bit. Whether or not it's going to be a 25% price reduction across the country or not, I don't believe that. I just don't. I don't see how you could get a 25% price reduction nationwide with a shortage of inventory. That's the problem.
So let me pull this back into context. You've said what you've said, and you've said it the way that you've said it, that we're not in a housing bubble. However, you've also said this, and this is not contrary to what you said about us not being in a housing bubble. There are certain markets that are way overheated, and there are certain markets where you are going to see in isolation maybe some significant problems that would be tantamount to a local market bubble. Phoenix, San Francisco, Seattle, Austin, Boise, Idaho. Those are the ones that in the conversations that you and I have had, we don't script this. I haven't written these down, but that's what you've said. Do you still feel the same way about those markets specifically?
I believe that markets that are relatively more expensive or that saw huge surges in prices during the pandemic are markets that are going to see a price correction. I also believe some of those markets, especially the markets where new construction really picked up. We currently have 1.7 million units under construction in the United States. A lot of them are concentrated in the West, in those big pandemic markets where everybody thought they were going to be making a ton of money. because the housing market was on fire, and those units are coming on the market. So it's good for potential home buyers because they're going to get more units, they're going to get more inventory, and they'll have more options. Prices will come down a little bit, and prices will hopefully get to a level that is manageable for most potential home buyers. Of course, that's been a trouble for builders because builders are squeezed, right? So we saw builder sentiment decline all of 2022 for most of 2022 because those builders that kind of built in those markets were expecting demand to be where it was at last year. Demand has come down. By the way, demand's still higher than before the pandemic, but demand has come down. What's the trouble here? The trouble is that because mortgage rates increase so much, existing homeowners are choosing not to sell their homes. They're locked into these really low mortgage rates. And with new construction coming online, these existing homeowners are even more likely to sit out because there's all that new competition, new construction, brand new homes coming on the market. And so I expect new listings from those existing homeowners to continue to stay below where they were a year ago. So they're down 30% year over year. And I expect some construction to come online. I said 1.7 million units under construction right now. But the question really remains, will that be enough to fill that gap? Inventory is still roughly 60%. We would have to see a 60% increase in inventory to get back to 2019 levels. Just imagine how many houses are missing here. We need more inventory for the housing market to get back to kind of a healthy level.
Appreciate the insights, Dr. O. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.
Freedom and liberty are important to all of us. If you're looking for civil, intellectual conversations with those shaping the future of freedom, try the Future of Freedom podcast with me, Scott Bertram. We speak with leaders across the country in the greater conservative and libertarian movements. In-depth conversations about where the next intellectual battles will happen across the country. It's the Future of Freedom podcast. Find it at americastalking.com or wherever you get your podcasts.